we are covering critical California-specific property tax concepts for the state licensing exam. The cornerstone of California property tax is Proposition 13, passed in 1978. For the exam, you must know its two main functions. First, it limits the general property tax rate to 1% of the property's assessed value. And second, it limits annual increases in that assessed value to a maximum of 2% per year. This initial assessed value is called the base year value, which is typically established when the property is purchased or undergoes new construction. A change in ownership is a key event that triggers a reassessment to current market value, establishing a new, higher base year value for the new owner. This is where a supplemental assessment comes in. An exam question might describe a scenario where a property is sold halfway through the fiscal year. The new owner will receive a supplemental tax bill, which is a one-time charge that covers the difference between the seller's old, lower tax basis and the buyer's new, higher tax basis for the remainder of that year. It is not part of the regular annual bill. It's an additional bill to catch up on the tax difference mid-year. Conversely, what if the market value of a property drops below its factored base year value? This is handled by Proposition 8, which allows for a temporary reduction in the assessed value. The exam may test your understanding that this is a temporary status. The assessor will annually review the property's value, and as the market recovers, the assessment can increase by more than the usual 2% cap until it reaches its original Prop 13 factored base year value again. Don't forget the standard homeowners exemption. This allows an owner-occupant to reduce their assessed value by $7,000, which translates to a small but consistent tax savings. The exam expects you to know this is for a principal residence only. A common exam trap is confusing the general tax levy with other charges on a tax bill. Special assessments and Mello-Roos taxes are not limited by Proposition 13's 1% cap. Mello-Roos districts are created to finance specific public infrastructure like schools and parks in newer developments, and these are paid for through a special tax levied on properties within that district, in addition to the regular property tax. Finally, we have the modern rules under Proposition 19, which significantly change tax-based portability. For your exam, focus on how Prop 19 benefits homeowners who are over 55, severely disabled, or victims of natural disasters. These individuals can now transfer their existing low property tax base to a replacement primary residence anywhere in California, up to 3 times. If the replacement home is more expensive, the difference in value is added to the transferred base. This is a major update from older rules that were much more restrictive. Here's a phrase to remember the core reassessment triggers. A property's tax base is set by Prop 13, but a sale or build will give you something new. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.